This is the Barita Podcast, which is a medium for information purposes only. This podcast is not a recommendation to buy or sell any securities. This isn't a research report, nor intended to serve as a basis for making any investment decisions. Contact a licensed investment advisor before making any financial decisions. Let's get into the Barita Podcast.
Hello, ladies and gentlemen. Thank you for joining us for another episode of the Barita Podcast. Just to remind you, you can hear our prior conversations on our website, barita.com. So I'm very pleased today to be joined by members of the Barita Brain Trust. We have with us today Darren McGregor, Head of Investment Research and Portfolio Advisory at Barita Investments. We're also joined by our Muirhead, who is our Manager of Investment Research. And we have Ambre Houslin, our Investment Analyst, with us. Good day, gentlemen.
Yes, good day, Ron.
Yeah, man. All right. So thanks again for joining us, guys. So we're going to get straight into it. I know Barita has some top stock picks that we've put out. So our episode today will be dissecting some of those stock picks. So I'm going to hand the floor over to Awa. And the question before us, Awa, is on the stock market, what are we to buy and why?
All right. So since I'm heading us off, I'll give my favorite, so to speak, at the moment, and that is JMMB. Now, Raul, I can give you many reasons why we believe that JMMB is a buy, but I'm going to focus on the valuation. There's over $1.4 billion in profit from Sagicor that JMMB has not recorded on its income statement in its third quarter results. Yet, the company is trading at a price to earnings ratio of 7.5 times. And for our listeners, that is a very low amount and means the stock at this moment is basically dirt cheap. Now, if we incorporate that profit from Sagicor, right, that was missing from the third quarter, the company is actually trading at a PE ratio or price to earnings ratio of about 6.7 times.
And what's a normal PE ratio?
So I'm going to get right into that, Raul. So right now, if we think about the main market, it trades at a PE of about 12.7 times, and this is data coming from Bloomberg, which is a reputable source for financial data. So just to provide some context now, Raul, if we assume JMMB should be at least priced at 12.7 times earnings, which is what the main market is trading at, then the stock shouldn't be trading for less than $87 at a minimum, Raul, right? And right now it's trading at about $45. So we can apply a bit of logic to this, right? And I think that's important. So just to put that into perspective, I'm going to use a comparison. Scotia has total assets of $590 billion. Mm-hmm. And guess what, Raul? The market says that Scotia, as a company on a whole, is worth $109 billion. Mm-hmm. So if we're going to buy the entire Scotia group, for argument's sake, we would need $109 billion. Mm-hmm. And I use Scotia because Scotia and JMMB are in similar business lines, right? Mm-hmm. Let's look at JMMB now. With $609 billion in assets, which is more than Scotia, mm-hmm. the market is saying to us that JMMB is worth $89 billion, less than Scotia. Added to that, Raul, right now, without even adding the more than $1.4 billion in share of profits from Sagicor that I just mentioned, if we look over the last 12 months, JMMB has delivered profits of roughly $12 billion, while Scotia has delivered profits of $8.4 billion.
Whoa.
So Raul, just from a logical perspective, we don't even have to get fancy. There's no way that JMMB can be worth less than Scotia with much more assets and greater profitability. And the market must correct this at some point. And this is just one clear reason why investors should buy JMMB.
All right, great. Thanks for that, Awa. I'll probably get in a conversation later as to why the market is treating JMMB like that, right? In the near term. But let's just switch over, Darren. You have the floor, man. What's your favorite? What do you think investors should buy, and why?
Thanks, Raul. So I'm a big fan of what I refer to as asymmetric risk return opportunities. And that's what we really have in Wisynco, right? So if you look at Wisynco, what you have is really a mix of both value and growth prospects, right? So if you were to ask why should an investor look at Wisynco or why they should buy Wisynco, when you look at the state of the balance sheet, right, they're positioned very conservatively, right? Mm-hmm. So they have a mix of low leverage and good liquidity, right? So what that affords them is the strategic flexibility to do some of the things that, you know, they've spoken about doing in the media recently with, pivoting from more of a defensive type of strategy and preserving cash during the pandemic to a more growth-oriented strategy as we recover and emerge from the pandemic. They have the cash resources to do that, right? Mm-hmm. So with those cash resources and the low debt, they have more options than a company that would be higher leveraged, right? So they have the option to say, okay, we can, do a deal with all debt. We can do it with a mix of cash. We can, they have the options to explore different avenues for financing, and also that will affect the cost of the financing that they receive for these new deals, right? So that's one side of the coin that we like from Wisynco. Now, despite them being so large and being one of the largest manufacturing companies in Jamaica, there still is some room for them to grow. There's still upside, right? So when we look at the overall growth of the company, it's quite modest. But when you drill down, I think there's a very encouraging story in the long-term growth prospects of the company if you look at the export growth, which is not only high, but also accelerating.
Okay. All right. Wonderful. Thanks for that, Darren. So, strong balance sheet and a deeper look at a long-term growth story. Ambre, you're up, man.
All right. So for me, one stock that I'm looking on right now is Tropical Battery Limited. So I think something interesting is brewing in Tropical Battery at this point. Exciting days ahead with this new joint venture that they've just started with CAC 2000, an ex-listed company on the stock market, on the junior market. Now, they have started to pivot into the renewable energy space, which I think is a tremendous opportunity, given the fact that one of the issues that has plagued businesses locally has been that of the cost of energy. And the approach that Tropical Battery is looking to take or to foster growth within that sector is through the provision of renewable energy solutions for commercial entities, such as industrial companies, and as well as providing financing for these projects. So they stand to benefit from two tiers within that space, as well as with the provision of technology for electrical vehicles. Now, the next thing, if investors look at the financial performance over the last quarter, they would have seen that revenues grew by 46% and net profit grew by 197%. Now, as I said, it's still early days in Tropical Battery, and something I like to say is that it's far easier to turn around a jet ski than a big cruise ship. And I think this nimble size of Tropical Battery will allow for the growth potential to be exponential within Tropical Battery.
All right, great. Thanks for that. All right, well, folks, there you have it. The 3 top picks from Barita's Brain Trust. So we heard from Awa, and basically, you guys can just nod if I have it right. JMMB has a compelling valuation. Our view, we think that it's undervalued. You compare it to Scotia, where it has more assets and more profit, but has a lower valuation. And I think the comparison is something like Scotia producing 8 billion plus in profits and JMMB producing a 12 handle. So Awa spoke to us and really was saying that the market has clearly lost its mind in the short term in how it's appraising both of these financial companies, and he likes that Darren communicated that Wisynco's balance sheet is strong. They're ready to pivot from playing defense in the pandemic to going on the front foot, using all of that capacity, what we call dry powder. I think the people in the streets, there's something like brick upon brick. I don't know. Do I have that right? But they have the cash to make the moves needed for growth, and not to mention the export prospects. So I'm thinks the market is sleeping on the joint venture that Tropical Battery has with CAC. Thinks there's a lot of potential there in terms of renewable energy and financing their clients. A jet ski is easier to turn around than a cruise ship, so the relative small size of Tropical Battery works for it in that sense, and he's looking for exponential growth. So there you have it, ladies and gentlemen. Call up the broker, call up Barita. Let's get you some stocks for your long-term portfolio. Gentlemen, thank you very much for sharing those thoughts.
Thank you, Raul.
And thank you, Raul.
Sure.
You've just listened to an episode of the Barita Podcast. The Barita Podcast is available on all Barita's social media platforms. If you would like to invest with Barita Investments Limited, visit our website at barita.com or contact us at 876-926-2681 to get started. This podcast is not a recommendation to buy or sell any securities. This isn't a research report, nor intended to serve as a basis for making any investment decisions. Contact a licensed investment advisor before making any financial decisions.